Grocery prices soaring, big companies making record profits, and families across the country struggling to keep up. What's really going on? Is this just inflation, or is there something deeper at play? It turns out, much of what we pay for at the grocery store isn't just a reflection of rising costs. It's the result of a handful of companies controlling the meat industry and raking in profits. These monopolistic practices have left many of us paying more while seeing no improvements in the actual cost of production. A few giant corporations dominate meat processing, and they've been able to push prices higher without facing much competition. For them, it's a win-win. For the rest of us, it's a financial strain. But it's not just meat, other industries are seeing similar trends. So, where are the laws to protect consumers? Well, antitrust laws are designed to keep companies from colluding. But they fall short when it comes to individual firms exploiting a crisis, like we've seen during recent market disruptions. In response, many states have enacted price gouging laws, but there's a catch. Without a unified federal law, companies can exploit loopholes and avoid punishment. A nationwide standard could be the answer to protect consumers from excessive pricing during times of crisis. It's not all bad news. We've seen some policies make a real difference. Take the expanded child tax credit, for example. During the pandemic, it lifted millions of children out of poverty. This simple measure gave families much-needed relief, proving that targeted policies can improve economic stability for many. But the benefits didn't stop there. With more financial stability, many parents could return to work, driving further economic participation and growth. It's clear, investing in families pays off. Another area where change could make a huge impact? Drug prices. Right now, Medicare is finally negotiating with pharmaceutical companies to bring down costs. If successful, millions of Americans could save hundreds, even thousands, on life-saving medications. Despite fears that this could hurt innovation, studies show that negotiating prices won't stifle the market. Instead, it could force companies to rethink their pricing strategies, benefiting consumers without slowing down advancements in healthcare. But to truly address the economic struggles facing millions, we need to rethink our approach. Many of our current economic policies are built on outdated ideas that no longer reflect the realities of today's market dynamics. For example, we've often linked inflation with labor market insecurity, but new evidence suggests that the relationship between the two is more complex than we once thought. Revisiting mandates for institutions like the Federal Reserve could offer a more accurate understanding of inflation and labor market conditions. This shift in thinking is key to crafting policies that meet the needs of today's economy. Medical debt is another area where reform could provide much-needed relief. Proposals to cancel medical debt or cap excessive drug prices could empower consumers, easing financial burdens for millions and boosting overall economic health. Imagine a world where patients aren't crushed by medical expenses. A world where families can afford both healthcare and groceries without having to choose between the two. Ultimately, the system needs reform. From grocery prices to drug costs and labor market realities, our policies should reflect the world we live in today, not the outdated paradigms of the past. And it's time we, as consumers and citizens, push for the changes that will make a real difference in our lives, because a fairer, more just economy isn't just a dream, it's a necessity.